to turn up the volume on your laptop or something.
Please, can anyone hear me?
Yes, we can hear you.
Okay, so thank you very much for this opportunity given me. My name is Ojo Akefi, and as part of A&D Forensics Bootcamp today, I would be presenting on um, understanding crypto-related um, financial understanding crypto-related financial risk, crime risk, which our focal for today, or focal point for, or the main topic for today is crypto and AML CFT risk foundation. And as part of the topics today, we would be looking at six focal points, which are one, the traditional and the digital asset money laundering, two, the Financial Action Task Force approach to virtual asset service providers, travel rule, the common red flags, role of compliance in digital asset firms, and lastly, we'll be having a practical suspicious transaction scenario to look out for. So today, we'll start with the definition of cryptocurrency. So as we all know, cryptocurrency is a digital money used on the internet to send, receive, or to invest. And it operates on a technology called blockchain, which keeps a secure public records of all transactions. And though it creates new financial opportunities, we should also have it in mind that criminals may attempt to misuse such technologies, which is why monitoring and regulations are very important to these things. So some of the key risk drivers about cryptocurrency are transactions can be done quickly across countries. I'm sure we all know how effective it is using crypto to send transactions across board. It's fast, convenient, and easily done with less charges. So people prefer to use the crypto than they going through the normal, maybe the bank channel or other channels where they would be required to, maybe to take like days or something for you to go. Just like we have it in Ghana here, sometimes if you are doing normal traditional banking transactions from maybe one bank to the other, how it takes long, like it can keep like maybe within 72 hours here, so from 24 to 72 hours sometimes. But though they are doing upgrade with it, unlike that, crypto is very fast. Also, people can create wallets without showing identity in some cases because of the pseudonymity of it. People prefer to use crypto to send their monies fast because their identities are hidden. And the third one has to do with new technologies evolves faster than regulations. We all know how sometimes technologies, when they come, people actually want to have it first before the regulations. And we also know that as and when people use, then regulators also come up with different regulations to guide the use of such technologies. So just like criminals may hide money using cash businesses, they may try to hide money using crypto wallets too. Yes, like we said about people create wallet without showing identity in some cases. So we move on to some examples of financial crime. And under that, we have money laundering terrorist financing, we have electronic crime, bribery and corruption, tax evasion, embezzlement, market abuse and insider trading, and cybercrime. So I would like to touch on all of them. So when we talk about money laundering, it's basically about turning dirty money into clean money. Example is like someone sells drugs and makes, let's say, $1 million out of it. Instead of keeping it directly, they open maybe outfit business like boutique, or they come up with restaurants to operate, just that they just so they would be able to mix the illegal money with the legal money, and people would see it like it's the money is coming from the business. Hope you get it. And also, when you go to terrorist financing, is like they provide resources to support terrorist activities and terrorist groups. So in this case, what we try to say is, um, if I am here and I'm sending money to somebody outside this, nobody knows where it's going because of my identity is hidden. People try to use these platforms to send monies to those groups over there. We also have e-crime, which is using computer or the internet to commit crime, and it's very common. It's very common. A scammer may send email to you pretending to be your bank or and ask for your password or something. The moment you give it in, then they start duping you. Or let's say they get your ATM card to get it to buy things or to withdraw your funds. And common example has to do with recently when um, during the USA inauguration, the president Donald Trump's inauguration, we all heard somebody actually faked an email to withdraw about $200 million, if I'm correct, from the inauguration funds. We also talk about bribery and corruption. This happens where someone gives money to give or gifts or money to influence a decision, to influence a decision. So we could say sometimes in government, maybe a contractor um, may kind of, in Ghana here, let me use Ghana as an example, where a contractor would give something to maybe the person who is supposed to sign, or the person who is supposed to give in with one or two things in order to get a contract. And mostly people feel like if they use bank, maybe the transaction could be traced or something. So they tend to use the cryptocurrency for such transactions. When you the next one has to do with tax evasion, which is illegally refusing to pay tax or hide income to avoid paying more. And so people also with this try to underestimate or understate their income for a particular period in order to pay less of what they are supposed to pay. We also look at embezzlement, which is stealing money you've been trusted to manage. Just like we have in Ghana here, we hear a lot of bribery, financial embezzlement with regards to government contracts and what have you. These are some of the financial crimes. And the last one I would want to touch on is the market abuse and the insider trading. So with the market abuse and the insider trading, is like using secret information about a company um, to make profits in stock market. So it's like we are here, we are operating a business, and then maybe the business is about to make profit. Then the manager then knows that the business is about making a huge profit. The manager will not tell anybody. Rather, the manager tends to buy in more stocks on his so that when and the profit is determined, they get um, more money. But for the sake of this presentation, I would like to have a focus on money laundering. So, um, just like I said, money laundering is the process of making dirty money look clean. It's just like using the washing machine, how the laundering processes go. And under it, we have three main stages, which is placement, layering, and integration. With the placement, is putting illegal money into the financial system. Example, depositing cash or buying crypto. That's how the placement usually goes. That's how it is done. And then the layering has to do with moving it around to hide its origin. So with the layering, and then it's moved to different accounts. These are the three stages. So the first, you put it in the bank account. The second part, which is the layering, is moving it through different wallets or different accounts to hide its origin. And the last one has to do with using it openly, which is the integration. So with the integration, you are taking it into the system. So people choose to invest it or choose to buy assets with it. So we move on to the traditional and the digital money laundering, as I've explained with regards to the three stages, which is um, the placements, layering, and integration. So this is how in the traditional finance setup it goes. They put the cash into the system, like bank deposits. They move it around many accounts. Then the last one, which is the integration, is they use it to buy assets like houses, landed properties, yeah, for themselves. But when you go into the crypto environment, mostly they buy the crypto with cash or bank transfer, move it through many wallets or platforms, then they convert it back to cash and spend it. Yes. So please, we move on to what's FATF approach to crypto companies. And the FATF here means Financial Action Task Force, and the VASP here means Virtual Asset Service Providers. So please, let's take note of it. So the Financial Action Task Force is a global body that sets rules to fight money laundering and terrorism financing. Um, so what FATF and CFT talks about when it comes to their rules, what they require companies to do is to verify your customers. Let us know who is using the platform, who is sending what to who. The um, there needs to be um, people need to know, the regulators needs to know where the sender is sending the money and where the sendee or the receiver is at any point in time, who is receiving so that they can track these financial crimes such as terrorism financing and everything, because it is believed that if you verify customers' identity very well, maybe say in Ghana, use my Ghana card, you know my details, it's used to verify me that I, Koja Kefi, is the one using this um you sending this money, then I'm sending it to maybe Iran, to so and so. Then they can track, say, okay, this is maybe terrorist financing, or this is this. So this is what FATF talks about when it means verify customer identities. And it's also they are saying you should monitor transactions, because just like I said, we need to know where the money is going and who is receiving, and also report suspicious activities, because until you get to know who is receiving and who is taking. That's the only time you can report suspicious activity. So if you verified your customer, you monitor their transactions, you can report suspicious activities to regulators. And also, they are saying we should keep records because maybe currently we may not see what's going on, but in the future, um, maybe through an investigation or something, we would have to pull some records for um, investigative agencies to know, or maybe to ascertain information about what happened some time back. And these rules apply to crypto exchanges, companies holding crypto for customers, and some brokers and payment service providers. Then we move on to the travel rule. So when we talk about travel rule, it means that when crypto is sent between companies, information about the sender and the receiver must go with the transaction. That's all. We need to know information of the sender and the receiver, because when you go to the bank or when you use the mobile money currently, they can know that um, I sent money to maybe Nana or Sebonsu, or I sent money to Rachel. That's what the travel rule is talking about. That crypto companies should be able to as part of the compliance in anti-money laundering, you should know more information about the sender and the receiver. And it helps track illegal transfers, just like we said in the previous slides about why FATF is talking about we verifying our customers and monitoring transactions. And the next one has to do with the next slide. We were talking about common red flags in crypto transactions. With the common red flags, so a red flag is a warning sign that something may be wrong. So example, there's like money moving very quickly through many accounts, or using services designed to hide transaction history. Others to transaction linked to countries known for high financial crime, many small transfers instead of one large one. And these are signs of or examples or signs of red flags when it comes to financial um, transactions and the crypto. But however, we should also know that a red flag doesn't prove a crime. It just means transaction needs to be checked. That's what red flags in crypto actually means. So we move on to role of compliance in crypto firms. So the role of compliance in crypto compliance teams are the financial crime prevention units. They are the securities in the institutions. They ensure that those entering maybe a banking facility, or entering a company is not having anything bad, any weapon on them or anything whatsoever. So um, the role of compliance in the crypto firms are: one, to check customer identities, know your customer, which is the KYC. You need to monitor transaction. We need to investigate suspicious activities. There is just like common red flags coming up. Report to regulators when there are issues of red flags, which we know some to be money moving very quickly through many accounts, or using services designed to hide transaction. These things call for compliance officers in various um, crypto firms to report to regulators, and also to create policies and train staff. Because at any point in time, compliance officers should have it in mind that um, they are the guide, they serve as the guide. So they need to be teaching There are co-workers, there are other workers over there on what needs to be done about crypto transactions. Then we move on to um, practical suspicious transaction scenario. So with this, I'll be reading this for us to join Joe about it on what we think should be the best. So someone opens a crypto account, then soon they receive many small amounts of crypto from different unknown people. They combine the funds and quickly send them to different wallets. Um, I I don't know if hello Nana, please can I engage with this point?
Absolutely, Kojo. Absolutely, you can.
Okay, so please, if I'm asking if someone opens a crypto account, then soon they receive many small amounts of crypto from different unknown people. They combine the funds and quickly send it to them into different wallets. What does it mean? Um, since no one is so why this is suspicious is because the activities doesn't match a normal customer pattern, and many small deposits can indicate an attempt to avoid detection because as we spoke about during the three steps when it comes to money laundering, which is the second one, which is the layering. They try to move it in a bit to different accounts, small accounts, to avoid tracing. And also, quick transfers suggest no legitimate purpose. And with this, what the company will do, or the crypto companies are supposed to do, are to one, ask questions, check the source of funds, monitor accounts closely, and report to authorities if necessary, just like um, Financial Action Task Force are saying. So the bigger picture is why this matters. Um, Financial crime can fund terrorism. It supports corruption. It harms economies and also reduce trust in the financial system because currently, if um, people are using such platforms for to support corruption or harm the economy, maybe you may be at the good side because um, you have what it takes. But let's project it to the let's have a bigger picture of everyone involved and see how they tend to also suffer and how it stifles economies because it is believed in economics that when more money are in the system, it creates inflation. So by applying anti-money laundering, counter financial terrorism controls to crypto, it also protects consumers and supports innovation safely, and it's also maintain financial stability. So above all, what uh, we are trying to talk about is it shouldn't be about the personal one, but the bigger picture. And the bigger picture here is if we have a good compliance or a good system um, for our compliance, it's going to be a win-win for the crypto companies, and also the consumers, because it protects you, the consumer. Just like we learned last week, people don't even sometimes know that their money moves. Their systems are used, their accounts are used to transfer money to different people. So when money compliance is very active and companies are doing it, it's it's protect their consumers and also maintain financial stability, whilst on the other side also help us suppress corruption and also suppress terrorism funding. So I bring um, my presentation to an end, and I would like to touch on A&D forensics and why A&D forensics is the solution to our crypto compliance. Because we help institutions comply with global AML laws. We track suspicious financial transactions and also help build expertise in financial crime. Thank you very much.
All right, thank you very much, Kojo, for the presentation tonight. At this point, I'd like to invite questions from participants. Like I mentioned earlier before the commencement of the presentation, this session is intended to be interactive, and so we'd like to know uh, what questions you would want further clarifications on. So the time is now. If you have questions, you can ask Kojo. I don't think, don't do you have any question? Courage. Courage, do you have any question? All right, so Meshach's hand is up. Meshach, you can proceed with your question now.
Yeah, thank you very much and good evening. And thanks so much for the opportunity to be here. My apologies, I'm getting very late. My question might seem a little unpopular. It's quite basic. What is the clear advantage of the crypto over the normal SWIFT or PAX? Is it like
Uh,
is the payment instant? Are there settlements? Is there going to be the usual settlements like how it happens within the transfer space?
okay. And please, should I answer or I should wait for other questions?
Yeah, Kojo, you
Okay,
can
so
answer.
the advantage of crypto over the using cryptocurrency over traditional banks is mainly about um, speed, speed, and also fewer intermediaries. You don't have to go through a lot of um, systems, just like in our traditional banks in Ghana here, where you have to move to, it has to move to financial clearing, has to go through this, and it takes this. But with crypto, it's the speed, it's fast. Yes, let me say, then no middleman like decentralization or something or whatsoever. So if you want to send money from Ghana to UK, maybe a bank may take you like maybe 3 days or something. Crypto is directly to the person's wallet in a minute. Please hope you get it.
Yeah,
Yes. And
yeah.
the fees are also lower. Maybe a bank may charge, let's say, like $50 or something, but with
Mm.
crypto, it's less. Yes, less than $5.
Great, good. Wouldn't you probably say that because the crypto space was something that was buzzing and there isn't enough risk management measures in place, probably with the coming in of regulation and a number of governance and control measures, probably it's going to slow it down compared to when nobody was probably paying attention. Because I'm sure right now we are going to tighten cyber security measures, data protection, AML, sanction screen, and everything is coming into play. So, wouldn't it look like we are probably moving it to the existing transfer mode, where with the coming in of these controls is probably going to then increase the turnaround time for delivery from one end to the other?
Oh no, please, no, please. So here's what I have for you. When you use the normal traditional banking system where you have to go through the process, you know how it is. And how would you feel? How would you feel if um, you are doing transaction or maybe somebody is using a platform, you don't know who is sending, who is receiving in the system where currently there are a lot of attacks, terrorism across board. So institution governments coming together to form regulation is actually to help customers and also protect the financial space, because it wouldn't be fine where people are just sending money across anyhow, but it needs to be regulated. People need to know what's going on. Assuming you and I, Meshach, right? Um, Maybe we know what you, the work you do, and all of a sudden you receive $1 million in your wallet. There is the need for suspicion, because we need to know why such amount of money has entered your account. Where is it coming from? You get it?
Sure, sure. I'm a compliance person, so I really
Okay.
appreciate and excited
All right.
about
Sure.
the based on the AML and the rest. I just wanted to appreciate the fact that with all these tightening controls, wouldn't get back to the normal bank transfer level, and maybe the interest and the VIM will go down because it will look like they're not the usual. But I'm happy to know that it's more like instant. Yeah. Thank you.
Thank you very much.
All right, so thank you very much, Meshak and Kojo. Please, who else has a question? Any further question, please? Meshak, your hand is still up. Does it mean you still have a question?
My apologies. It's already on.
All right, so I'd like to find out from Trauma if she has any additional inputs.
Oh, I was hoping to stay mute, but it's okay since it's a conversation. Hello everyone. Nice to be here. Well done, Kojo. I'm very particular about meeting Mishak because he asked like a really good compliance question. Um, and to buttress the point that Kojo has earlier mentioned, there are so many advantages of cryptocurrency. And if you want to go back to what it were before, let's say going back to evolution of money, you agree with me that even the Ghana cedis you're using today was not the first form of money. It started way back as, let's say, cowries, shells, and all that. And now we've gone digital and now we're going into cryptocurrency. So it's something that has come to stay. So the likes of FATF, which is the Financial Action Task Force, the regulators that you know and that we know for us that are already in the space, what they keep doing is to make sure that they are not left behind. But because the thing about this is that the bad actors, they try to move faster, right? So when it comes to cryptocurrency, before now, a lot of persons perceived it as something evil, something bad, something nobody should touch. But that's because the bad actors were able to find about it first. They saw it first. They were able to start using it first before the, let's say, the good people started coming in. So now that, even if you check for FATF recommendation 16, 15, 16, then 16 in particular, which talks about the the FATF travel rule, you will see that the regulators have already tried to put in controls into place. And now these controls are not meant to stifle regulation or innovation, as the case may be, or make it bad. No, the controls are just to make it safer for everybody. So the likes of the regular man, the regular woman can just be confident that, oh, I can actually play in this space. The trust that we also have in the financial institutions like the banks can come in the crypto space, and we won't lose out. So, like if you check FATF's post today, you notice that they released guidelines around offshore virtual asset service providers, right? You can check it out, you can read it up, right? I also encourage you to read the, even as at last no, this is March, first week of March, they released guidelines on hosted wallets, right? So when it comes to the crypto space, we have two groups. You have the centralized exchanges. So the centralized exchanges are like the banks that we know. So people go there, people go do KYC before you use the platforms, like example Binance and Coinbase, Bybit. They are just the banks, you know. Before you go there, you must do your KYC, especially for the compliance ones. They must know you. They'll monitor your transactions and everything you do. But there's another group, the group of people that say, no, we don't want to even go to the banks. We don't want to go to the exchanges. We want to hold our money ourselves. We want to be our own banks. And they exist. So those ones have what we call the custodial wallets. So those ones, you can call it custodial wallets. FATF had called it unhosted wallets in their last report. So now regulation is now tilting towards that. And even the FATF travel rule covers it. So it goes to say that even the space is still evolving. I think it was yesterday that SEC released their guidelines for virtual asset service providers that want to play in the sandbox, right? So what I will encourage you is to also update so that you don't get left behind, right? Update your knowledge. That is why even us at A&A Forensics, we do trainings, we support virtual asset service providers, banks, financial institutions, to actually know what is happening and how to mitigate the risk and also do business. Yeah, compliance is not there to stifle business. So you can still do your business, make your money in a compliant and very good way. I can see someone is raising his hand, Philip or someone. So that's it. Maybe we should hear from Philip.
All right. Thank you, Choma, and thank you to the presenter, Kojo. Um, a good one, I must say, right? I have two questions to ask. One centered around the travel rule that you mentioned, Kojo, right? Now, the question is this: what are the biggest challenges institutions face when implementing the travel rule for cryptocurrency transfers? I don't know if you get the question or if I should ask again.
No, your question was right. Are you working in the financial system already?
Yes, I'm a
Office.
compliance analyst with a financial institution.
Okay, because the name
Yes,
seems very familiar.
yes,
So,
okay, okay. You can respond to that before I ask my second question.
yes. So some of the, not really some. As time goes by, the challenges reduce, but we have what we call the sunrise challenge. And the sunrise challenge comes from what we call interoperability. Let's say if you understand, okay, let me just use the bank that you know as interoperability. So now I want to ask, I know Omni Basic Bank, I know First Atlantic Bank. So in Ghana now, if I have an account in Omni Basic Bank and I want to send money to First Atlantic Bank, is it possible? Like I have an account and I want to send money to someone in First Atlantic Bank, is it possible in Ghana?
Yeah,
Yes.
yes, it is.
Okay, so it means it's interoperable, right? So now, when it comes to the crypto ecosystem as well, you can also see something similar. So somebody in a bank-like exchange, let's say someone in Bybit now wants to send money to somebody else in Binance, and because the travel ruler said, please share these details amongst yourselves. So if let's say the like of let's say Bybit now is using another infrastructure for their own travel room, maybe from another service provider, and maybe Binance is using another infrastructure from another service provider, and they don't speak to each other, they don't connect, they are not interoperable, right? It's a challenge. So that had been the challenge for some time, but till the regulators kind of came in and said, okay, so because when these things come, there'll be solution providers. So solution providers should make um, produce or build systems that are interoperable. So you mustn't be on the network I am on before I can communicate with you. So in some cases, you will notice that, oh, the person you want to work with, let's say I want to send money from Bybit to Binance, and maybe Binance does not even have any platform yet, right? How will you transfer the information? It's not possible if they don't even have one. Talk more of the one they have does not connect with your own, right? So it brought about the sunrise challenge. So that's how they found other ways of sending those data, things around maybe the wallet test. So the person that is trying to now, maybe if it's an unhosted wallet, the person that is trying to send the funds would confirm to that entity, to the compliance officer behind that entity, that that wallet really belongs to him or her. And to do that, you have to do a test transaction, because only through a test transaction that you can confirm that. So those are kind of some of the challenges, but they are now being solved with time. If you check out FATF, if you check out some of the regulatory reports, you will see some jurisdictions that are already FATF rule compliant. You could also talk about maybe technical expertise around it, right? Because you have to have a team that is technically inclined to be able to even understand how to implement these things, right? It's not just the basic platform that you use in TradFi. So, but most of these challenges there are ways around it, really, because it's no longer as it were 4 years ago, 5 years ago. It's getting much better and it's becoming mandatory. More countries are adopting it, more countries are getting used to it, and all that. In fact, in Switzerland, for instance, they were the first to adopt it. Before you do any transaction, you must have to be compliant when it comes to travel. All right. So I believe that answers your question, Philip.
Yes, it does. Thank you very much. As I said earlier, that I have two questions. I don't know. Am I still permitted to ask the second question?
Yes.
Okay. Still on. Okay, this is a little bit. It sounds like a deviated question anyway, but it's on the future of crypto compliance. Since this is a compliance masterclass centered around crypto, right? Now, with the emerging technologies such as AI automation, because I think currently AI automation is making wave in the technology space. Now, how will emerging technologies such as AI automation transform cryptocurrency compliance operations?
That question is very important. In so many ways. For instance, transaction monitoring. You do your transaction monitoring with tools. You do your fraud detection with tools. I always say this when I teach. If with the increase in deepfakes, like if you don't know what deepfakes are, they're like AI generated fake videos and all that. So with the advent of or rise in things like deepfakes, you cannot use a very cheap or the low standard, let's say, onboarding tool, right? You must have an AI powered super tool to be able to detect that that customer trying to onboard on your platform is actually not the person behind that video or whatever liveness check you want to do. So AI has to be used in building these tools. And then when you talk about maybe models, building models within your systems, trying to automate some processes within your compliance programs. In fact, it goes beyond even the the regular transaction monitoring, keeping of records, sending activity, filing of suspicious activity to the FCA, right, for Ghana. So it can be used in those processes. The only thing is that you need expertise. You need to be able to train your model because even in as much as you're using AI, you have to have your policies. In fact, there is already a standard for implementing AI, right? And the blockchain analytic tools, because when we say blockchain is transparent, transactions are transparent, we have blockchain analytic tools that we use to trace and the movement of funds, which we can also use in wallet screening, because you need to screen your wallet against sanctioned entities like OFAC and all that way. And you also need to monitor people, your customer behavior. You can talk about behavioral monitoring, alerts according to transaction volume. So those behavioral monitoring, your AI can be trained. You have a model that can train, you can train your AI based on the typologies you've seen, because these things are on a risk-based approach, based on what the typology or the fraud risk typology is within your entity, right? So you can use AI to build all of those. And the beautiful thing is that if you're upskilling, you should also, as a compliance officer, also upskill in that regard, how you can also use AI. There are a lot of trainings and all that happen. So it makes the work easier, faster, right? But that does not remove the human element. So you cannot say AI should go and do the work. There must still be the human element. So let's say you're supposed to do the work in 5 days, the AI can make it faster, automate it, and then you do the work in a day. Does that answer your question?
Yes, it does. Thank you for the detailed response. So invariably, your advice for compliance analysts or officers that are looking into delving into crypto would be that they should learn AI automation. Is that correct?
Yes, you have to. And you have to learn it in line with the principles. There's a standard for AI already. I think it's ISO 443 something. I don't know it offhand. So you have to learn it with the standard already. So if you have your, because you as it boils down to, in fact, if you follow me on LinkedIn, you will notice I've said for you to be a future compliance officer, really, you have to learn uh, um, engineering or automation. You have to learn it. The regular compliance officer now might be scared of all those things, right? But for you to really play in the future, you have to put it in your roadmap, because that's the future. It's just like you saying, "Oh, you don't want." Then in the future, you'll be out of service. So it's something you have to really learn.
Thank you very much. I followed you on LinkedIn. I follow your post a lot, right?
Okay,
Thank you.
okay.
Yeah, and I think a colleague of mine too contacted you sometimes within the week from an
Okay.
institution. Yeah, so I don't want to mention it, but you should know. One Olale Olabaju, you spoke
Oh,
with
okay.
him. You spoke with Muiwa too, Olubi.
Okay.
Yeah, so these are my colleagues, right? So it's fine. Thank you for the detailed response and enlightenment. I do appreciate. Thank you.
You're welcome. Thank you so much. So you can anybody can feel free to reach out. Your questions will be answered, and if you are also be on the lookout for our trainings. We just concluded the crypto compliance training. I think they were conferred last week Thursday, yeah, because as at the last bootcamp, we were letting people to come for it, telling people to come for it. So you can always be on the reach out. We do trainings, we do consultations and things around that. So feel free to always reach out. Our doors are always open. Thank you.
All right, thank you, Choma. Thanks for the deep insights. Time is already up, and then summing everything up today, I believe we've all come to understand that crypto does not eliminate financial crime, and that it only changes how financial crime happens. And this is why institutions, I believe we would all agree, must develop crypto risk awareness, proper compliance frameworks, monitoring systems, properly trained compliance professionals. And this is where firms like A&D, for instance, come in. I mean, helping in financial institutions, regulators, and investigators understand and manage these risks. Next week, we'll move deeper into the ecosystem by examining how exchanges, VASP, and wallets operate. Understanding this operational structure is critical for anyone already working or seeking to work in the crypto investigations or compliance space. Thank you, everyone, for your participation today. A special thanks to Kojo Akafi Jr. for facilitating today's session, and to you, Choma, for the powerful contributions. Uh, let's all endeavor to be part of next week's bootcamp session. And I wish you all have a great evening. This is where we end today's session. Thank you, everyone.
Thank you. Bye. Okay. Hey, both of us are left. I'm trying to end the meeting. Oh God. Oh. And I have to join again so I can
Still
get the.
not record.
Oh, let me join with my laptop.
Okay.
Hey, this can't
Well
be.
done.
Thank you. I never experienced this one before. I think internet is back here. Thank God.